No worry. So we'll explain consolidation price in a consolidation on whatever time frame, higher time frame of course, and then we look in a low time frame relative to what time frame the consolidation is, and then I'll show how you can trade ping pong. Like as in you do buy sell top to bottom of the consolidation. Yeah. So this one Solana on the 1 hour. Yeah. There's your consolidation box. Yeah. The purple one. Yeah. And if we go to the 5 minute, go to the 5 minute. Can you see price is moving nice?
Where do the circles come from?
I actually put the circles in when you went.
Oh,
so here is the first like touch, and your consolidation. You can draw it. The box. You can draw it. Obviously. So the consolidation box you can draw after this dotted line, yeah? So before that you can't tell it's consolidation yet. So after that you can see on the 1 hour, yeah? If I go back to the 1 hour, can you see by this candle, price had already jumbled in there, so now you can draw a box. Yeah? And going to the 5 minute. Because relative to 1 hour, 5 minutes is basically 10 times smaller.
Okay, yeah.
So it's you can trade it. Can you see how it's nice? You can see clear it's moving up and down, yeah?
Yeah.
Obviously this one here, it's like I just leave that alone because price is moving very thingy, and also it's out of the box. Like I'd wanna take a trade. Okay, yeah, actually we could say we took a trade here, but it would be a loss. Like prices come down, 3 bearish candles. 3 bearish candles. Can you see the 3 bearish candles? Zoom out. 3 bearish candles.
Yeah, 1, 2, 3.
Going for a sell. See the high there, this one.
Yeah.
High there is 1.9. Let's put stop loss at 250. Yeah. 250 is 2.5 USDT. Yeah. And then the TP at the other end of the box, yeah, which is 250 as well. So 1-to-1 risk reward basically. Yeah. Or yeah, leave it at that, and then obviously he's taking a loss. Yeah, but
afterwards
you come back again, follow the same concept.
So would you go for another one, or would you just
go for another one?
Yeah.
Sell there.
No, as you though, would you, if you took that, you see that as that loss, but would you think, or would you think leave it?
Me, I can trade multiple times in a day and it's not affect me. Yeah, it's depends on what I decide, but obviously someone else might not be able to because it's more thing.
Yeah.
Again, TP there. But normally I would not trade. Why? Because it's Friday. But this is different because this is crypto. Crypto does not close on Friday. Whereas Forex, after 3 p.m. on Friday, I'd be like,
why? Those 2 hours sometimes isn't it?
No. After 3 p.m. on Friday specifically.
Yeah.
Okay, your phone quick down. Yeah. Okay. On Friday after 3 p.m. it's like you're just chasing because market will close in about 5-6 hours later. So then there's not much to work with.
Really?
Yeah. Also the volume will die down as well because the market is gonna close. Whereas obviously
would that be the case, the opposite case on a Monday morning?
What do you mean?
Meaning like there's a lot more volatility, a lot more stuff going on because obviously the weekends. You see what I'm saying?
Yeah, I get what you mean. Yeah.
I mean, like Friday, everybody's on a relaxed chill mode.
Yeah.
And then on Monday.
Now Friday up to 3 p.m. you can get good moves on Friday because Friday is also a day that has news. Not every Friday, but Friday like NFP these things is on Friday 1:30. that as
every
Muslim,
week.
not every week. When NFP is once a month, but also now I'm saying there's a few USD news that happened specifically on a Friday at 1:30 p.m. UK time. For America, that's 9:30 or something, yeah, AM, yeah. But as obviously as Muslim, if you go in first Jummah, then you know
It's
what
a
I mean.
complete clash. Yeah.
That you can't do that. So me over the last like 5-6 years, I've just given that a miss.
The whole day.
I'll just give the whole, unless I catch something in the morning, I'll just give it a miss. And plus, if it's news, in the morning might just consolidate because it's waiting for the news. The only time I might catch it is like after Jumma, you're going to Lidl or Sainsbury's and quickly pull the phone out. The thing like that.
Look at the chart.
But then that's a bit like, you know what I mean? Relax, man. Just take one day off, bro. Because it doesn't work good. Like, say my granddad is going to the Lidl, yeah, and I'm like, oh shit, where's up with the stop loss? And he's asking me now, where's that? And this, and I can't. I'm not even realizing he's saying anything to me because I'm not focused on the one thing.
All right. This part, hey, Vedisha.
In this example, yeah, stop loss above here is way too big. Yeah. Yeah. So now we can't really see a like you can do this one here. Like that's like a little minor pullback. But if we want to see a clearer like high for stop loss, yeah, because we already know our TP is that big, yeah, which is 2.28 USDT. Say you're doing 100 Solana with the leverage, that trade will make you 228, yeah, 228 quid, yeah. And so now what do we do? Go in a smaller time frame because it makes it clearer. It's like if I can't see something on your face at a distance, what do? Just go close it to your face and very simple.
So the 1 minute now.
I don't like the 1 minute, but for this example, I will have to go in.
Why?
I just think it's too volatile. Not too volatile, it's too small of a time frame. It's like having a chat with a 5-year-old. How's the markets going? Do you get it? Do you get it? Okay. 1 minute he might say the market is good, 2 minutes later he say now the market is bad, 5 minutes later he say the market is fantastic, he's killing it, you know what I mean? The 1 minute it's thingy is always changing because it only takes 1 minute for a candle, 10 candles is only 10 minutes, 30 candles is only 30 minutes. So it's like, or someone can give the example, it's like a woman. The woman might be good in the morning and lunchtime is having a bad day, then 3 hours later is having a happy day, then you know what I mean? The moods it's too much. Yeah. Whereas like going back to at the beginning when we were talking about the daily resistance and the 15-minute resistance, they take a bit more thing to form and this and that and whatever. Do you get? Whereas a 15-minute bullish trend won't be as easily changing compared to the 1 minute. 1 minute 6-7 candles only take 6-7 minutes, whereas 6-7 candles on the 15 minutes is like 2 hours. Yeah. You get? And on the 1 hour chart, 6-7 candles 6-7 hours. And the 4 hour chart, that's like a day. You get?
Actually, because in the higher time frames,
that's why I give that example of the same trader. He knows what these multi-millionaire traders like Q Banks and Bernie know. He knows the market structure and he thinks flipping it what's happening the last couple of years. I'm not a millionaire himself. He's trying to use that stuff in 5 minute, 1 minute, 15 minute. There are some traders, yeah, great. He's killing it in the 5 minute. But remember, still, to be honest, from what I see, is even if a trader is trading the 1 minute or the 5 minute, he's still using the higher time frame to come down there. And even then, in my experience, the big traders who are doing multi-millions, they're not sitting on the 1 minute or the 5 minute. You know, like Shoaib Guri and all of these lot who are doing multi-millions, Q Banks, he's not coming to look at the 1 minute. They don't look at the 1 minute. 1 minute is like, talking to a 5-year-old, what is the market doing? You do get it? And that Sami guy said from Canada.
Consolidation and trading.
Actually, we just leave the stop loss. That's alright on the 5 minutes as well. Yeah. Can you see this? Look, there. That's the same structure we saw on the 5 minute. Yeah. So we just leave the stop loss. So the 1 minute did not change anything. Yeah. change my view on doing a stop loss. Yeah, just supported the 5 minute reasoning. So that is a 1 to 1.9 risk reward. So you would have lost 100 quid to make 119 quid. So slightly more, still great. Obviously, if you're doing 1,000 to 1,190 quid, you know what I mean? And then obviously that you enter the trade 5:55 p.m. Friday. Remember, specifically this is for crypto. Yeah, crypto does not close, so that's why 5:55 Friday doesn't matter. Yeah, it's not closing.
24/7 crypto.
Yeah. So look, 5:55 p.m. By 7 p.m. Friday, if you're doing 100 quid, if you're doing a 100 quid risk, yeah, you made 119 quid. 5:55 to 7 p.m. is 1 hour 5 minutes.
So in 1 hour 5 minutes,
you made 119 quid. Fantastic, innit? And that's just like low level example, innit? Imagine you doing 1,000 risk, you would have made 1,190 quid in 1 hour 5 minutes. Even big time earners, like in terms of professional career, to earn £1,000 in an hour is like, that's like your top level of directors and stuff like
QC or something.
You know, like these next level.
Yeah, that is a sick trade, isn't it?
Yeah. So you can now, but then this is where you have to, if you are emotionally will go pear shaped. Yeah, like one thing that goes pear shaped with traders. Yeah, they win 2-3 trades in a row, and they think, flipping hell, bro, I know the market inside and out. The market does not know me. I know the market. You know what I mean? And he thinks, all right, 2-3 trades have built up a nice little buffer there, little profit there. You know, a fourth trade, let me go double down. And double down. He literally goes double down.
And it's happened to so many, probably.
Many. That's where the statistic 90% failing, 10% succeed. Those 90% is not because of complex, problems or issues or things in their performance. It's simple stuff like this. Like he was good enough to take 2-3 trades.
Yeah.
He was good enough to take 2-3 trades, 4 trades in a row that won. And he thought, let me double down in the fourth one. Instead, he literally went double down. Forget having that 3-4 trades of profit. He lost that, and plus he lost more. Whereas if you went with your head logically, you done your normal risk, and it lost those three trades or whatever. Maybe you lost half of the profit, or just one trade of profit. So still overall you were up. Say those 2-3 trades you made 10%, for example, yeah. And that fourth trade you're doing 2% risk. You only lost 2%. You're still up 8%. Even if you done 5% risk, yeah, which strategically you increase the risk, for example, yeah. From 10%, take away 5%, you're still up 5%. But if you decided to do more than 10% risk and you lose, then everything you just made is gone.
And sometimes and some more.
And plus, someone's gone and done 20% risk because he thinks, nah, I won so many times, I'm gonna win again. That's the the casino gambler's mindset thing. Like keep going. Quit. You know that they say quit while you're ahead.
Yeah.
Quit. It's like they say the example of the casino or whatever like that. He's up 1,000, 200, 300, 400. Quit. Take your money and go. It's not gonna last. Yeah. Even your 10 grand up, 50 grand up, 100 grand up. Those professional poker players or whatever like that, and these kind of people, they say quit while you're ahead and this kind of thing because it does not last. It takes like that for someone like in those professional poker players. The geezer's up 1 million. It does not take quick for him to the million is gone.
No, yeah.
But if you walk away with 1 million, now you've reached 1 million. And the main thing people fail to realize, the market is there tomorrow. Market is there next week, the week after, the month after, the year after. It's always there. You can come back and make your money again. That's what I tell this Sammy. I tell him, in your head, think, look, I come back tomorrow, the market is going to do 100 pip. move tomorrow again. I can catch that. If he doesn't do it tomorrow, the day after, if not that, the next week after, it's still gonna come again. Innit? You can't. The way I asked him, the way sometimes you're trading is like today the market is gonna shut down and say that's it. We're never gonna trade ever again. That's not gonna happen, is it?
That's pure FOMO, basically.
Yeah. He says that, and we say FOMO, fear of missing out.
Yeah.
You're not missing out nothing.
Yeah. Wow, look at this market, man. It has no feeling for no one, nothing.
No.
It's one of them. You either have the emotional control or not.
It's like that Tom Hogarth video we saw the other day. He goes, I don't have no strategy. He goes, I just mastered myself. And he goes, on my chart, I just see different people's emotions and I just flow with the market. Obviously, the way he explained the flow with the market, it sounds like he's getting ilham or something like that. But really, he does know the market structure and the candles and stuff like that. But he's really trying to say he doesn't have like some like you know what I mean, like some like he has to go up down left right. Then I'll go for buy sell. If he sees the market is bullish, there's a little pullback, he'll go for a buy. If like that, not like a fixed like if he does this or blah blah upside down rough, so something like that. And that's what this market structure thing is. I said throughout the session or wherever you sit, always draw the boxes for the structure. So you're seeing how the market is flowing, and then now you flow with the market as well. Market is showing bullish thing. You go in a pullback, follow the market as well. If the market starts breaking the structure, then obviously you close your thing and sit down, wait. The other thing is waiting. Say you get taken out on a loss, and now you need to wait to see is the market changing the trend or is it just doing manipulation. But if you don't wait and you think, no, I'm just gonna get in trade, that's where people mess up in it. They don't have the sub.
Yeah.
Now look straight after you catch a trade, but this not everyone can catch it because you have to be emotionally thing as well. Like imagine you get a bit emotional or whatever like that. You want to put a too small stop loss and put a big risk. So many different things in it. So look here, that side is you sell from here and buy from there in the consolidation.
Yeah.
Yeah. So from there you got your one bullish candle, put in your buy. The low is there, which is not even 1 USDT, but let's just put it to like 1.25 USDT. Yeah. Stop loss, nice stop loss. Yeah. And your TP is the other side.
Nice TP as well.
And the risk reward is actually very good to look. 1 to 1.9, not 129. It's actually the one is not there, so it's 1 to 1.19.
Which means the one isn't there.
One risk.
Yeah.
To that's just the reward.
All right.
So your risk is 1. That just shows the reward. The reward is 1.9.
Yeah.
So it's 1 to 1.9.
So the risk reward is 1.9, but your reward is 9.
No.
And 1.
No.
Huh?
That 1.9 number is just your reward.
Oh, okay.
Your risk is always 1.
All right. Okay. For every 1.
So this is showing you for your reward. So your risk is already set at 1, whatever that 1 unit is.
Yeah.
And this is showing your reward is 1.9, what your 1 unit of risk is. So if your 1 unit of risk was 100 quid, so that means you're going to make 190 quid. Yeah? Or 1,000, 1,900, 10,000, 19,000. 100,000, 190,000, big bowler 1 million, 1.9 million, even market thingy 10 million and 19 million, and there are people literally who are doing those kind of things, sitting in a room like this in a house. You know what I mean? If you said that 30 years ago, they'll have a laugh at you. To say someone is sitting there and he's doing that kind of numbers. But now, since things have progressed, they are literally someone who's sitting at home. He's making more money than the guy who's working in Goldman Sachs.
Yeah.
And he's wearing his shorts. He's having a coffee. He's having a croissant. He's having a this and that. Putting his feet up. Whatever.
And I'm sure his family's. I don't know. The government can't be too happy about this, man.
Of course, crypto futures is banned in the UK.
In the US as well.
I don't think so. I'm not sure. But in UK, we only use the crypto futures through like this offshore kind of thing. Those ones.
So the one I've got here,
BingX, you can't use that. Mexi, you can.
Yeah. So, yeah,
you just went past. Oh, I just saw it. There, Mexi. Let me show you. Close. See, it looks a lot more complicated, isn't it?
Yeah.
It's good, man. See, look, this is showing like your order book and stuff there. Yeah? But this is how you do the leverage. Yeah, you ain't got any money in there anyways. Yeah, so it's not can't do nothing. Yeah, but like this shows you the leverage. You can do the leverage. Choose whatever leverage, buy, sell. Look, there's your leverage. Can you see 200x?
Yeah.
Continue. No. I see, you no funds. But look, you can do from 1, just spot, all the way to 200. You can do any number, whatever you choose. You can do 40x, 20. But obviously, they say safe one like is maximum 20x of whatever you think. Maximum 20x.
I leave that. I'll put some money in there. Confirm.
You can't confirm it's got no money.
Alright, you have to do it with money.
Yeah, because they can't do a position if there's no money in there. So look at that trade. And if we do a Q bank style thing again, where if you hold it, then you catch a fat trade all the way up there, innit? But look, who can hold it through this pullback? How many people will be like, no, F it, I just close it.
Yeah.
And even go to loss or break even. But Q banks, forget break even, he let the trade go into drawdown again.
Wow.
After being in profit.
It's quite emotional to handle that stuff. Yeah, you need some.
Because the mental thing is like, you had a trade that was floating, I don't know, 50 quid profit, for example, yeah? And now, you let the trade come.
Deficient.
Yeah, like you're in minus 80, 90 quid, yeah? And like, in your mind, the thing that is playing in your mind is, you are 50 quid up or more. Now you're sitting at obviously you're not close the loss, but now you're at minus 70. Then that mental pressure, some people they fold. So what will they do? They'll close it at a loss. But then what happens? And then later you come back and
I see that. Oh yeah. See that is painful.
You
bro.
think the thing idiot in my head said close it at loss. If it goes big,
like smashing the computer up, man.
Bro, I feel like ripping your hair out.
Yeah, and I'm sure people have done
it. Loads of people have done it.
Guarantee.
No, don't tea. People will throw their phone and you know what I mean, like.
I would do it. I would.
So that's the end of the consolidation video. Trading consolidation.